Dollar yen daily forecast April 30th, fxempire.com. The dollar yen pair is one that many traders are watching at the moment. The pair features two central banks that are trying to ease monetary policy in different ways, and as such, this is a real race to the bottom. It appears that the Americans are winning. This is, of course, assuming that winning is a good thing. However, the Federal Reserve Chairman didn't take the idea of more easing off the table during the news conference this week. This sends a signal to the markets that it is all right to take as much risk as possible, and it is a way to punish bondholders into investing in other vehicles. However, he didn't specifically say that easing was likely either. Because of this, there may be quite a surprise in store for market participants in the near term. On the other side of the equation, the Bank of Japan has introduced an expansion of the bond purchase program by 10 trillion yen, and they even are talking of buying ETFs in the marketplace as well. In reality, it is the Japanese that are easing even more and should be seeing the value of the yen fall over time. However, the markets will do what they want, and spending too much time thinking about what should happen can certainly cause losses. The 80 level, which the market is currently focusing on, is the sign of a significant fight and probably very predictive spot in this chart for the overall longer term. 80 was the site of a recent significant breakout. 80 is also where the 50% Fibonacci level is from the rise. The 200-day moving average is creeping into the area, and 80 is a large round psychological number. On the downside, we have this downward channel. In the big scheme of things, all of these things add up to much more importance than this level. Of course, we have to wait to see what the market does, but we are currently waiting to see if we get that supportive candle around 80, which could very well happen on Monday, in order to buy from. Perhaps a hammer, a bullish engulfing candle, or something to that effect will appear, which could get us long. Once we get below 80, we still aren't really sure about selling because, quite frankly, once you get down below 80, you have to worry about whether or not the Bank of Japan will re enter the markets and intervene. They certainly are hell bent on killing the value of the yen, and it is hurting the Japanese economy. Conversely, the Fed doesn't seem to worry about the value against the yen of the dollar as it would as much as, say, perhaps the euro. This pair is kind of its own particular market and isn't as connected to the other ones, so we could see some kind of strange move. Again, 80 has all of the potential of support. If 80 doesn't hold up, it's at that point the next real sign of support will probably be in the form of intervention.